What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, we'll be speaking with my great friend, Samir Madani, co-founder of Tanker Trackers. We'll be hearing Sam's thoughts on the fundamentals in crude oil. And in my final thoughts, we'll go to the charts, and I'll tell you what I'm seeing in crude oil. But before we get Sam on the line, I want to remind everybody that there is an E-mini crude oil contract. We're going to be talking a lot about crude oil today with Sam. But if you want to learn about the E-mini crude oil contract, go to activetrader.cmegroup.com, click on products, and you will learn everything you want to know about the E-mini WTI crude oil, symbol QM. Hang tight, traders, while we get Sam on the line. Sam, thanks for joining me on the show.
Thanks for having me on, Anthony.
Man, I'm loving the look, man. Hair's looking good and everything.
I even showered for you.
I know, I'm loving this Skype format. I'm always wondering what I'm going to get, and you're by far best dressed and best hair so far out of everybody we've had on. So, and you know, I'm always looking at people's hair. It's just, it's a thing. It's a thing. But
that's big coming from you, Anthony.
Right? So, Sam, look, a lot of people have been saying to me, Anthony, why haven't you done shows on crude oil in a while? And I'm always like, well, it's not moving. And it's not something I trade all the time. And I've talked about this a lot. I do look for swing positions every now and then in crude, and really just nothing has come up. I mean, it's like earlier in the year, it was not the biggest talk because obviously COVID and stocks was huge, but crude oil was just a lot of conversations about it. And now we're just back to where it's barely even mentioned. Why is crude stuck here?
Well, it seems like whenever we take 2 steps forward, we have to go back a step. And I felt that things were progressing fairly well up until the hurricane season kicked in. And that really impacted the refining sector in particular. So for me, I've been looking at all the various metrics regarding EIA inventory. And the thing that really is actually bothering me right now is the fact that the refinery runs are still low. So they're under 15 million barrels per day. And if they were exceeding that on a 4-week moving average, then would have a much healthier U.S. economy and so on, as a point of reflection of that. And so I think that now that we're still averaging like around 13.3 million barrels per day or so, it's not good. And therefore, I don't see any big spike in oil price anytime soon. However, that said, I do believe that as of, say, spring next year, we'll start seeing more people traveling, particularly by air, and we'll see more refinery runs as a result. So I think definitely over 15 million barrels per day in daily consumption, or refining rather.
Yeah, I mean, crude oil is one of those markets to where I go to the fundamentals before I go to the charts. A lot of markets, I'll maybe go to the charts first, and then I'll see what the fundamentals are. And this is why I really wanted to speak with you. You're probably at the top of my list when it comes to finding out what is happening fundamentally in crude oil. And what you're saying is right now, I guess the gist of it is we're just stuck here for a period of time. Price is obviously reflecting that. What is it that you're looking at right now? Like, what is the top thing you're looking at right now?
Right. So, I mean, we track the actual vessels that deliver the crude from point A to point B. And from what we can tell, things are pretty calm right now. They're steady. Yes, we have some wild headlines every now and then. For instance, lately that Iran has pumped up its exports to 1.5 million barrels per day. It's still a preliminary number, and it'll probably come down to 1.2 or 1.0 at lowest for this month. However, all in all, compliance is looking fairly good, I would say. Even Saudi Arabia is holding it nice and steady around 6.2, 6.3 million barrels per day, which is down from the peak of something like 10 million barrels per day we were seeing back in April. So they should be around 7, no more than that. That should be their average, really. And what happened was that China had the floods in the southern part of the country for about 2 months, and that poured around 4 to 7 months worth of rain, and that caused the whole system just to slow down. So what they did was they had a lot of these vessels just sit out in anchorage and pile up a massive what's called a floating storage, which I call FOSTO, and this became a astronomical number, over 120 million barrels just floating. It's congestion, so they can of course take it all in, but the problem is that land storage capacity has filled up rather quickly because they're not consuming as much. However, when you look at the psychological impact which COVID has had on gasoline consumption, it's very interesting. So you have more people driving cars as opposed to riding the bus or train. And now, because of school season kicking in again, kids are being dropped off. I mean, I'm talking about worldwide now. People are being dropped off by their parents before they go to work, or maybe they don't go to work, but they come back home and work from there. So that's also an interesting thing, because that also boosts the sale of secondhand cars. So you're going to have a lot of cheap cars out there, which will be bought and fueled up and so on. So that's actually going to be driving the gasoline consumption going forth. There is excess jet fuel in the market because of the fact that there's less flights. However, flights have picked up. And what I'm seeing in news reports about is that the jet fuel will be converted into fuel for vessels, ships. So they're going to be consuming that as quickly as possible. All these products, refined products, they have a fairly small or short shelf life. And so they have to be consumed very quickly. Otherwise, you're going to spend a lot in maintenance, keep them in storage.
This is why I come to you for the fundamentals, and you just explain it, and this is always so interesting to me. And what it sounds like to me is that it's balanced right now. We have some areas where you're seeing pickup in demand, and other areas where we have surplus, and it just is this balancing act of why we're seeing the price in crude oil just very range bound. And I think, I just want to say this to the traders out there, this is what's so important, because that too can be an edge, right? I mean, if you know it's range bound and you're looking at your strategy, that can be an edge. You know, you're not seeing, Sam, any one side over the other telling you that the price of crude should be going higher or lower.
Correct. Anthony, it's just like watching a nature show where they say life finds a way, the market finds a way as well. And that's what I'm witnessing. So for every problem, somebody comes up with a solution, and it's all a question of logistics. The whole flow of oil and refined product is all about logistics. So if they need to get something fixed, they work on that. And so this idea of converting excess jet fuel into fuel oil for vessels is a really brilliant idea. Now, if they can convert it to other products that are in high demand, they will do that as well. But we do see that within, let's say, OPEC, you have few countries that are exempt from the production cuts. So those would be Libya, Iran, and Venezuela. Well, the exports by Venezuela have dropped to abysmal low numbers. It went down to 250,000 barrels per day. This is a country which used to be over 3.5 million barrels per day in exports a couple of decades ago. And so as a result of the fact that they ship out a lot of heavy sour crude, which is actually needed in the Far East for expanding infrastructure, because it produces the bitumen, which is used in the asphalt. So you need that for fresh roads. And it also produces a high yield of diesel, which is used by machinery for laying down all this infrastructure. Now, this heavy sour crude wasn't available in large amounts coming out of Venezuela. So Iran picked up, basically ate their lunch and started shipping off the heavy sour from their offshore ports. So that's why Iran also boosted its exports. And they decided they didn't need to boost production. Instead, what they did was they started draining their storage. So we see a lot of countries coming up with different things while still complying with actual production. So they can boost exports and without touching production. So at the end of the day, it's all a question of logistics. Yeah.
Yeah, no, you're right. I mean, it's always an education hearing you talk about this. And I want you to talk to the traders out there today. And
yeah,
you know, for us, that's what it's all about, right? Finding the next price movement in crude. And what I want to ask you is,
I can explain my story, what I've done.
Okay, let's go right. Yeah.
So we had a talk about half a year ago, you and I, regarding what would happen and so on with oil. And I told you that I went I made an investment for the first time, a long-term investment.
Yes.
That's right. I took my pension fund and I bought into a fund which is based on oil and gas. And I got in on the last week of March. And that was I would call it the mother of all discounts period. And so it went up very quickly after that. I was up maybe 40%, and then it's come down again. But nonetheless, it's still plus for the year. And I'm happy with that because my investment, or my intended investment horizon, is between 2 and 4 years. Because oil is all about the boom and bust cycles, and you just have to pay attention to that if you're gonna invest long term. If you're gonna trade on a daily basis, good luck. But when it comes to the investment, I just look for the absolute best possible opportunity. And having researched and tracked and even traded oil for now almost 5 years, I decided I'd make a long-term investment just now, half a year ago. And so I'm happy with that investment decision. And I really think that if you're not too familiar with the actual technicals, then go and invest on the fundamentals. Make the long-term investment. Buy a mutual fund or an ETF that encompasses a lot of different parts of the sector. So it's not just the production, but you need the refining, you need the pipelines, you need even the vessels and so on, because everyone gets their day in the sun, right? So it's nice to have that variety.
Yeah, Sam, I'm actually someone who does look at the longer term, more swing positions in crude. I actually use futures for that. And I want to leave you with this question. What should we as traders right now be looking at? And we talked about how it's really balanced right now. What would shift that balance that would then give us a lead into what the next directional move in crude would be?
Honestly, I wouldn't even bother too much about looking at what's happening in the world of oil production, or even things like exports and imports and so on. If I was looking for a good feel of the market right now, I would just look out the window and look at traffic. And I would look at the what's happening out on the street. Are people moving around as they used to? Is it higher? Is it less? So it's very important to gauge that traffic in particular. Now, for instance, you have the situation where people are living or working from home and they're ordering things online. Well, a truck has to make that delivery. And so there's all these online web stores like Amazon and so on. They're shipping a lot of product right now. And obviously that's consuming a lot of diesel. But we need the gasoline consumption to go up if we want to see higher refinery runs. So I think now, as a fact that schools started, we're bound to see more of that happen. So the issue is if we can get through this alphabet soup of hurricanes right now, and hopefully not have to deal with that over the coming months, then we'll start seeing that big 15 million barrel per day in refining in the U.S. So I think that once that happens, we'll start seeing prices go higher. So I'm not bothered too much about oil production. It's the refining.
Gotcha. And I love that it's like, use your eyes, see what's out there, see what's happening. And another thing I want all of our listeners to know, to use their eyes, is something that you do. So before I let you go, talk to everybody about the excellent work you guys do at Tanker Trackers.
Thank you. Well, we decided ever since start that we would not spread ourselves too thin and try to track every single vessel on the planet moving oil from point A to point B like everyone else does in this industry, because they depend entirely on data that is provided voluntarily by the vessels. Well, in the good dark corner of the oil market are a lot of actors who don't want to show what they're shipping. And so we decided that we would niche ourselves in and try to make sure that we can shine a spotlight on that. So we use satellite imagery every single day to find where those vessels are, what they're moving, and help complete that gap in the oil data. So We've been very busy these past few years since we incorporated in 2018, and I'm very happy with the progress. We help traders get a better feel of what's going on a week-by-week basis.
Love your work, Sam. Huge fan. Been a huge fan for years. Thank you so much, my friend, for joining me today on Develop Your Edge.
Thank you for having me, Anthony.
Hang tight, traders. I'll be right back with my final thoughts.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Final thoughts for today, traders. First, a shout out to Sam. He's a great friend of mine, and I'm a huge fan of what he and Tanker Trackers have done. And I highly recommend, if you're a crude oil trader, you check out Tanker Trackers. Now, let's take a look at the charts. Crude oil is one of those markets where, as I mentioned in today's show, that I like to look at the fundamentals before I go to the charts. Because of people like Sam and some of the other people that I have on the podcast and on this show, they understand the fundamentals so well that I like to know what is happening that I'm not aware of before I get to my strategy, because I'm not trading it intraday. And I also mentioned in today's show that sometimes when, like Sam had mentioned, that the fundamentals are pretty balanced, and you could see that reflecting in price right now, that can also be an edge. So let's talk about that when we look at my strategy. Remember, you can get this for free at anthonycrudele.com, and everyone knows the drill. I talk about this every week. First of all, I'm telling you how I think, not what to think. And when Bollinger Bands are opening and the market's going down, like crude was just a couple of weeks ago, maybe a little longer than that, you're either going in that direction or I'm not fading it until the lines, the Bollinger Bands start to come back in, lines are drawn, and then we can manage risk a little bit better. And just look at the chart right here, and what does it tell me after I talk with Sam? Sam said fundamentals are pretty balanced. Same here as I see in my strategy. A couple things I want to talk about. One, I said how that could be an edge. This is Develop Your Edge. It could be an edge if you're an intraday trader because we're kind of trapped in price. So maybe you could trade longs and shorts in equal size. I mean, that's something that I would think about because I look at my daily levels and say, look at 4140-ish, we call it. That's the 50-day moving average. And my orange level, 3834, that's support. We get, that's a pretty tight range for crude. I mean, this would be something we've seen a few months ago. That would be a 5-minute chart possibly with those levels. And now that the levels are a lot tighter, and I know that the fundamentals are balanced, if I'm trading it intraday, I'm not. I feel like my edge would be able to just trade on both sides, not fully committed to any one side. We're going to be choppy. You recognize that. That's important. Now, me on the longer term, what did Sam say today? Use your eyes or check out Tanker Trackers and see what's happening. If something shifts in the fundamentals, one thing I will say about markets that are range bound, and for traders like myself who trade crude more on a swing basis, when we're balanced and they come out of balance, boy, that could shift quick and we could get a sharp move. So what I look at a lot is what's that center line for me? And that center line for me right now actually comes in right at the 50-day moving average. Let's call it 41.44 to 41.25. We pop above there and get a daily close, and there's some fundamental bullish news out there. That might be a trigger for me to get long. And the targets would be 44.25, 48.68. Remember, we could go from a range-bound market to a non-range-bound market, a one-dimensional market very quickly. Flip side is we get bearish. We start getting daily closes below 38.34, 33.91 could come into play quickly. So I watch both these levels and say right now we're balanced and somewhat trapped there. But if we start to get closes above or below my levels with that fundamental news behind it, that could be a trigger. So once again, knowing that a market is balanced fundamentals, and then you look at your strategy and it confirms it, once that balance shifts, could be something interesting to take a look at. Remember, traders, if you have any questions or comments, please put them down below. You can also follow me on Twitter at Anthony Crudele. And don't forget to check out Instagram, Anthony C. Crudele. That's a wrap for today. See you next week.